Hey, everybody. Welcome back to Think Wealth Live. Looking forward with Jim to talk to Maria Montie. Maria, welcome to the show, managing partner of ShindleRock. And today we are talking about problem solving to minimize taxes and get the most out of your cash flow. I mean, music to, I think, everybody's ears, Maria. And so let's kick off there. When you talk about minimizing taxes, let's start off here. What's one thing that people always forget about when it comes to, looking at their taxes and understanding something, about taxes that they've been overlooking, that when they come to you, you say, oh, you should, be looking at it this way. What's a fundamental miss?
Aside from, one of the things I think people miss altogether is thinking about this before April 15th. So having this conversation now is a good thing. But I think the one thing they miss is, really getting a handle on all the buckets, all the opportunities that are out there and having a conversation. So when we have a conversation, I'm like, well, this sounds like you might be something applicable to you. And they're like, oh, I never knew about that. Never even knew it existed. So instead of, I think people get stuck in a rut, every year, one, avoiding to having to do their tax return, and then two, frantically getting it done, before April 15th, that you don't even have the time or the mindset to step back and kind of look at this as more of an exercise rather than a chore.
Yeah.
Yeah, and getting into that early, as you just said, the conversation for this April really should have been a year ago and ongoing. There's been so much change. It requires knowing what strategies are available and knowing that early, not now as we prepare for April, last year as you prepare for this coming April.
Yeah, well said.
Yeah. Yep. We were joking that you have had to tackle an amount of change in the tax law that normally takes 10 years or more for it to occur, and it's all been jammed in over the last year or two or three. So there are more opportunities that people are unaware of, I would say, than normal. Would you find that to be true as well?
Oh, absolutely. And even firms, big and small, are having a hard time keeping up on it to be able to advise our clients quickly because all this is happening now. So it's a challenge. It's kind of fun. I like being busy and on my toes, and this is definitely getting me there.
I bet.
Well, I know you're brilliant, and so that helps. But if we were to think about tax planning in maybe two buckets, those that are strategies unique for business owners, because there are so many, but then those don't apply to all taxpayers. So then there's another bucket of strategies that we might chat about that apply to everyone, applies to your personal tax returns. John was asking what is a common mistake? What are some of the biggest mistakes or biggest missed opportunities or potholes that you're seeing on the landscape now? In either of those two categories, for business owners or on our personal taxes? What are some of the biggest potholes or strategies that you're seeing?
I think on the personal side, those who are getting W-2s and wages from an employer, I think one of the things that people don't think about and maybe aren't even advised on is to look at all of the savings potentials within the benefit plans offered by their employer. And maybe it will apply to them to even think about it. So HSAs, dependent care, FSAs, the integration between an FSA and an HSA if they have both of them, because there are some rare circumstances where you can use both. So when I sit down with a client, I probably dig and ask a lot more questions than they ever initially would have thought. Usually it's, here's my stuff, work your magic, whereas my magic comes into play with talking and having conversations and digging things out that might apply to them. Now, from a business standpoint, I think, right now, one of the things that I think are being possibly left off the table is looking at all the little things in these tax law changes, even the most recent one that came on board with the stimulus, because these weren't just stimulus packages for businesses for PPP loans and EIDL grants, especially the first one. It included a lot of tax law changes to help be a stimulus to businesses. One of them I'm looking at right now has to do with depreciation and amending. So it's one of the things I think is being missed is, we're looking at today, we're looking at 2020 finishing it up, and now we're looking at 2021. but there's also opportunities to go back to 2018 and 2019 and amend returns for a few different things. One of them being depreciation, which can help drive either increasing or decreasing income depending on what strategy you want to use going forward for tax purposes.
So Maria, say I'm a business owner and I had a real rough 2020 and I had a lot of losses. Recently, you haven't been able to take those losses into prior years, but the CARES Act has given a fresh opportunity at that. Can you briefly speak to our business owners who are listening, who may have had some business losses in 2020?
Yeah, absolutely. So instead of the old rule up until recently was that you couldn't take losses back, you could only carry them forward. And even that had a limitation of 80% of future taxable income. Now the rule is that you can carry them back not just 2 years, which was the old rule, but you can carry them back up to 5 years. And it gets even better. It's not just your losses that you may have in 2020. It's also your losses that you had in 2019 and 2018 can go back 5 years. So we've been doing a lot of visiting on 18 and 19. For those that we haven't gotten to or we held off in making those decisions, we're definitely revisiting them when we're doing the 2020 work.
So a business owner could file amended returns and potentially get back massive refunds by applying those losses in those previous years. That's huge. Another, if you're not a business owner, hang on, we're going to bounce to personal tax planning shortly, but PPP loans have been a big thing. What do we need to know right now if we're a business owner who took a PPP loan?
If you're under 150, don't sweat the paperwork. You need all the information, but it's a very simple process. We've been waiting for that, hoping for it, and it came on board. Biggest thing from a tax perspective, I'm sure everybody's heard it by now, you are allowed to pick up all of those expenditures as a deduction, so that there truly is no taxable impact, as it was kicked out when it first got kicked out, as it was advertised as. So that is huge. It took a lot of weight off our shoulders, off our clients' shoulders, that they can use this. They'll get basis for it for those of you who are partnerships and S corps. So you're not going to get dinged on that side of it as well. It truly is a no taxable ding at any point in the process.
What about the partial payback? I know the rule had changed for smaller businesses where they had to pay back, I think it was 25%. And then that changed, I think you would know better than me, where they didn't have to pay any of it back, depending on what type of company and corporation they were. What's that? And then also what about the second round?
Yeah. So I'm not quite sure what you mean about the 25% payback. A certain portion of the funds for forgiveness have to be towards payroll, which is at least 60%. So the other amounts can be used for rent, utilities, the other qualifying expenses. But even if you weren't able to use all of it towards those 60-40 split, you won't then get it all forgiven, or you'll get some of it forgiven, but you can still keep the money as a loan if it's used for certain expenses. And the interest rate on those loans is great. Yeah. So there's more things you can use on the loan than the forgiveness, rent, utilities, interest, other than the mortgage stuff that was originally out there. So that's something to think about, is just because you didn't meet all the parameters for forgiveness doesn't mean you can't keep the money and that additional piece be sent back or paid back over time as a long time as a loan. And the second part to your question, PPP2, totally new stimulus package that came out. Pretty much if you qualified for PPP1, and you used up all the money or shortly will, then you're able to apply for PPP2. I think the door is still closed as of today or tomorrow on everybody. They're doing a wave of preferred type of industries first, and then it'll be open to everybody. And we do think that the funds on that are going to get used up a lot quicker now that the systems are already in place for pushing the loans through and getting the money back quickly. And once the funds are used up, so it's first come, first serve, really. So you want to get going on that.
Yeah, and those doors open up, and how do they pick who gets it, right? I mean, it seemed like a lot of people got left out the first time, and so maybe you can't answer this, you're not the government, but if the last people get first, right of first refusal, how does it help everybody else?
Well, so for the people who didn't get it the first go round, and there was a lot of frustration in getting the paperwork in and getting all of it was all online. So getting all of the boxes filled out correctly and then getting a rejection and not quite understanding why. So we do have a couple clients that were very frustrated and literally gave up on the process. So now with the second round, they are applying for PPP 1 because you have to have 1 on hand and used before you can apply for 2.
Oh,
so
that's interesting.
they are circling back, and now that things are, so they get a second bite of the apple, which is nice. But again, once the funds are used up, it's done. As to how the decisions were made as to who got the money and who didn't, it pretty much was, if you got the digital application went through and all the boxes were checked and it met all the parameters, you got money. It wasn't like, well, we're going to hold back on this business because we're waiting for all of the, restaurant people to come through first. It wasn't like that at all. It was truly a first come, first serve. First come being as soon as everything got through and all the requirements were met. So if you got rejected, then you kind of went back to the end of the line again. If you decided to push through and reapply.
So we're talking about planning strategies, tax planning strategies for business owners. There is so much to cover. Because of these law changes, so much opportunity. A lot of it had to have been tackled last year, but there are still things that can be addressed now. And so there's still reason to reach out. If you don't have this kind of counsel, there's still time to get advice that can make a difference for last year. We've mentioned being able to apply losses from 2020 historically, depreciation issues, how to navigate the PPP. What about entity selection?
Mm-hmm.
That was such a shift from 2017 when that tax law change occurred. And now we're wondering about a pivot because of the new administration.
Yeah.
What are you telling business owners right now on those related issues that seem like they could be up in the air?
Right. So entity structure for us has always been something that we look at from year to year. We had a lot of people pivot to be an S corp even before the new rule, and the new rule back in 2018 when it started just made it more attractive.
Yep.
We honestly didn't have too many people shift from the C corp to the S corp just because the C corp rates were still very attractive, from a potential of 35% down to 21%. And there are some long-term advantages for staying as a C corp, especially if you're looking to sell your business within the next 5 to 10 years, or if that's even a possibility. Because there's some back end things. So I think what you mentioned about planning, that is the key, and having a look at what today looks like, kind of budgeting and forecasting what we think the next 3 to 5 years are going to look like, as well as what's your end game with the business too. Right. So if your end game is to sell in 10 years or within that time frame, then even though current taxes may be lesser by switching to an S corp, it may not be benefit on the back end because of the tax advantages you can get on the gains of selling your stock. So, and as long as it's having those conversations and not just doing things in a window as like, oop, the tax law is changing, let's switch. It's, well, what does that mean? Not just today, but in the next 5, 6, 10 years.
Yeah.
Boy, that's right on. That's great. John, did you have anything else on business owner tax planning?
I was just going to say, I mean, listening to everything that you're talking about, Maria, is every reason why everybody needs a CPA. Everybody needs guidance, and anybody who's listening to this and doesn't have one, they should call you. And if they're not happy with theirs, they should call you, because it always amazes me when I hear people do their own taxes or their own this or own this, because it is so many complicated and there's so many things that you can miss. So I just wanted to kind of highlight the power of mentorship and sometimes mentorship isn't free. You have to actually pay for it, but it actually makes you money. So just going back to what you talked about as far as minimizing taxes and increasing, cash flow, you can actually make more money with the right accountant because they can guide you in the right area. So I just wanted to highlight that.
Yeah, and I'll just underscore one point on that, and that is that sometimes those benefits come in lumps, like in lumps and chunks. And these last several years is very opportunity rich. And then there may be a few years where it's more about compliance with tax law than it is about planning strategies that can really save a lot of money. But absolutely, the lots of opportunity and things to navigate now.
Yeah.
So what about planning on the personal side? Most opportunities to plan for this coming tax season for April have passed. That would be with the end of the year. One example where there's still some control would be determining how much to fund retirement accounts. Is there anything else that our listeners should have on their radar for things they can yet do to affect their 2020 outcome?
Yeah, if it's just a straight personal tax return not integrated with the business, you have a lot less opportunity. You mentioned about retirement accounts. That's true. In line with that, I would also throw in a health savings account, because really that truly should be looked at as a retirement account as well. So those are April 15th cutoffs. This past year it was actually July 15th, so that created some opportunities as well. There are a couple elections that can be made by the due date of the tax return without extensions that may or may not apply to things going on in their lives. Like I'm thinking about those who do a lot of trading activity. Obviously, that's going to be a very narrow niche, but there's, those are things to think about on a person by person level when we're sitting down and meeting with clients. There's part of it is pulling out questions and information through discussions. So they may not have enough to itemize and therefore take the deductions that they've done, but there is a $300 amount that they could take on page 1 for this year. Small amount, but again, something that they would not have had otherwise because they don't have enough to itemize. So little things like that.
Yeah. Yes, those are great points. And so one of the areas of planning, just as a quick cul-de-sac to be very specific, that we've been helping clients with is in the area of what's sometimes called, I think I can say this compliance-wise, they sometimes give it the name the mega backdoor Roth. Yeah. It's a vernacular. What it really means is the ability to make non-deductible contributions into a employer-provided retirement plan. We're seeing this a lot in solo 401ks. So if you own your own business and you don't have any employees other than your spouse, you can do a solo 401k. And there's a way to get over $37,000 into that plan if you have enough income that can all go to a Roth, which is tax-free for your lifetime and your spouse's lifetime. So there's a lot of, I know, inside tax words in that whole set of sentences, but the point is there are still things that can be done in these retirement plans that you might not have known about that really can move the needle in terms of your long-term tax planning and saving. So getting into a conversation, if you haven't been proactively contacted by your advisor team on ideas like what you're hearing, then that's a check engine light that you might need to upgrade your advisory horsepower. Any comments on that, or should we shift to things that you might start thinking about now for 2021? Any other comments though on our previous topic?
I do have a comment on the Backdoor Roth IRA.
Yeah.
I have clients who come to me and say, I can't put into a Roth IRA because I'm over the income limits. But what you were just talking about, that technique of the backdoor, is a part of that as well. So just because you make over the income thresholds doesn't mean you are precluded from doing a Roth IRA and gaining those long-term tax advantages.
Yeah, you do the math between your HSA that you mentioned, and you do a spouse and yourself backdoor Roth, and if you have a solo 401k and your spouse works, your husband works with you, I mean, you could get, what did that be, 75, 89, 90, almost $100,000. It sounds unbelievable. People won't believe me.
I'll add one more person to that threshold.
Yeah.
Or to that list, or your dependents who work, even if it's a job making $3,000 at McDonald's or something.
Right.
14 to start socking away money into a Roth, amazing.
Yes, my son's out looking for jobs right now. He's 14. And but you're right. As a family household, you can get $100,000 into tax-free compounding for your life accounts. It's amazing, but those are things that most people don't know that they don't know about. All right. Well, what else on 2021? What are things ideas to inspire things that you see people doing that are either timely because of our current situation or timeless, that are tax planning ideas that are just solid that people should consider?
Really just sitting down and planning in general, planning what your goals are, what your buckets are, what buckets are most tax efficient. So, I also talk to clients about liquidity. So I often have clients say, well, I can't put away into a 401k because, I have no savings. Well, let's talk about other ways. If you are saving, that we can take tax advantage of it and still make it liquid for you. I think that's what concern people have right now is flexibility to be nimble and have access to cash and liquidity with a huge amount of uncertainty that's going on with a new president regime, with COVID. When is that going to end? Are the vaccines going to work? For business owners, will my business start to turn around and make money? It's how do you keep that pendulum moving? How do you keep moving forward with planning and yet keep yourself nimble and flexible enough? So those are having conversations and not just, running your business, but running it holistically in your personal and your business.
John, this is an area in your world. Sometimes don't we find that when we have uncertainty, we run and hide rather than step in and embrace. And Maria, what I hear you saying is, yes, there's tax law uncertainty, but the goal isn't to wait and see, because that can become wait and missed opportunity. But you're saying, hey, step in, have the conversation, do what can be done. There are things that are flexible. But John, you, I know, serve as a catalyst for business owners, successful people to say, no, engage, step in, be proactive.
Yeah. I mean, I think you have to be proactive. It's always amazing, Maria. I used to run a real estate shop and commercial real estate shop. And I would send out reminders when quarterly taxes were due, because everybody seemed to forget. So there were a lot of guys who would be like, can you send them out? Can you send us reminders? And I would say, how do you possibly need a reminder? It's like the same give or take a day or two every year. And how are you not planning, ahead of time? And it always amazed me how many people appreciated that. And so my question to you is, we're talking a lot about being proactive, being preventative, and planning, right? Like Jim was saying, we should have been talking about this last year, but we're talking about it today. And so I just want to raise the level of awareness and consciousness when it comes to proactiveness and planning. And so how should people be thinking and shifting their mindset to jump in and think ahead?
They should be having the conversation when they are gathering their data right now. Not just the conversation of what do you need to do my 2020 tax returns, but what do you need to do to help me through 2021 and even the next year or two after that? Let's have that conversation. So that's the mindset they should be in, is really forward thinking. Not, we're not here to write a history book. We're not here to put numbers on a tax return, what already happened. We hopefully already know roughly what that's going to look like. And now let's make our history. Let's make that future and that forward thinking.
We need the mindset of like going to the dentist, where that appointment comes around every 6 months and I just make time for it.
Right.
So when you're seeing your tax professional now during this tax season, make that appointment for the summer, for sure, as well. So there's a pre-allocation of time to address these issues.
And then we do a lot of focus that there's at least 3 touch points, or 2 to 3 during the year. One is when we're doing that tax return and kind of touch base about the next year. Towards the end of the year as well, because we like to kind of get another snapshot, as well as then that 3rd touch point might be interim during the year. And also it has something changed. That's the other thing. If there's any change, pick up the phone and give us a call. I mean, that's what we're here for.
And Maria, a key piece to this I've seen over the years for success is the kind of integration and coordination between advisors. So I know firsthand that you and your team work hand in hand with the financial advisor, and that 2-person team, two teams working together, is so helpful to be a catalyst to get things done, even just the administrative side, but certainly on catalyzing these kinds of ideas and getting them implemented. So I would say something for people to think about is if they realize, well, gosh, I don't know that my different advisors really talk to each other. That's another check engine light that you have opportunity for a whole lot more horsepower and outcome on your behalf.
Absolutely.
Yeah, no, I agree with that. I think, and you don't want to wait till it's too late. I remember my dad passed away when he was 71, completely unexpectedly. And my wife didn't really know where everything was. She hadn't talked to all of our people in a long time. And we did a team meeting with all of the wealth advisors, the accountants, the attorneys. I mean, everybody. So everybody was on the same page. Myself, my wife, the team. it's so critical. I just bring it up because I agree with you, Jim. It's important to get everybody talking before you have to get everybody talking.
Exactly.
Yeah. So I think it's great. All right, Maria, you ready for a quick speed round?
Sure. Okay.
All right.
This is tough, Maria. Be ready.
Right.
I'm competitive. No.
Finish this sentence, Maria. In 2000, one thing people need to do in 2021 is
focus. Planning and focus.
Yeah. Good one.
That is good. What? You waiting for me to ask a question?
I thought you were gonna ask a question. I'll ask another one.
I was just remembering, Maria, that you CrossFit. Are you still getting a chance to do that in the midst of this?
I try to, and the thing about that, if you don't do it regularly, you have to like regroup and get back in shape. So
I know, you lose all the blisters on our hands.
I have the whole little setup in my garage. It's quite a nice setup though, actually. But yeah, it's nice to go out there and do some weights or some, HIIT type of activity based on CrossFit methods and get it kicked out. I love doing weights. I love doing that high cardio intense for a short period of time and then getting back to work or whatever.
So there you go. Our tax professional of the day is inspiring us to get healthier as well. I think that's a pretty good value add.
Yeah, I think that's a good one to end on. Maria, tell everybody who your ideal clients are and how they can get a hold of you.
Sure. Our ideal client is like we've been talking about, somebody who wants somebody to work like you, John, as a business coach, who wants that team approach, who wants to be forward thinking, who wants to create a relationship and not just, have somebody do their tax return once a year. And they can get a hold of us by going to our website at ShindleRock.com. Shindle is ShindleRock.com, although other variants of the name will get you there too. And then, take a look at our blog too, even for just information for your own advisor, whoever that might be, because we have a lot of information on the PPP, on the tax law changes. We try to keep it fresh and not too bogged down like day-to-day stuff. We'd like to keep it succinct and to the point so that you're not inundated with a lot of information and you can absorb it. So it's a great resource, just the website in and of itself.
I love it. Well, I appreciate you being on the show today. It was like a mini master's class. I felt like I took a class at Ross School of Business or something like that. I appreciate your insights. I learned a ton, and I'm going to let Jim close it with his thanks, and he's got to read some compliance stuff.
Yeah, thank you, Maria. Hope you get to get some CrossFitting in soon, and I think you rock climb too.
Yes,
which
I
has
do.
Been a sad loss for many of us during COVID. But you're right, John. I have a compliance disclosure I must read, and that is that I, Jim Nudzinski, am a registered. I am not
you are not
retired.
retired. Jim is still taking on new clients and servicing his current clients.
Oh, I am a registered investment advisor who offers investment advisory services through Motive Wealth Advisors, a DBA of True Independence Asset Management, a registered investment advisor with the U.S. Securities and Exchange Commission. Any material discussed is intended for informational purposes only. It should not be construed as legal or tax advice and is not intended to replace the advice of a qualified attorney or tax advisor, even though we have Maria here. This is a podcast. This is not official advice giving. So this information is not an offer or solicitation to buy or sell securities. The information contained may have been compiled from third-party sources and believed to be reliable. Oh, it was great to have you, Maria. Thanks for being with us.
Nice to be here.
Yeah,
Thanks for all the good work you do for clients out there.
All right. Thank you.
Keep doing great things. Thanks, Maria. Thanks, Jim. That was fun. Thanks, everybody, for listening. If anybody needs a CPA, reach out to Maria.